All right, hello everybody, welcome back to the channel. Today we're talking about the mindset that it takes to become a Palantir stock holder. So what I want to do in this video is talk about a couple things. Number one, I really want to talk about what it means to have a short-term versus long-term mentality, especially for the Palantir stock. And number two, I want to talk about growth potential. So first thing about mentality. Look, I see a lot of people in the market right now with a very short-term mentality, especially when it comes to high-growth tech stocks. And I understand why. I understand the sort of idea that you don't want to have all your money parked in one place. You want to have it diversified, especially with the concerns of inflation, and tech stocks don't do that well when there's inflation. I get it. However, a long-term mentality, especially when it comes to a stock that has the potential to be like the Tesla of data, I know this is very cliche, but when you're dealing with something that has that much potential, you've got something that can really, really take off. And I think it's very important to understand that. I'm in Palantir stock and I've got over $25,000 into it, over the next 5-6 years. Like, I'm into the stock for that long time. Now, if the stock were to go to, I don't know, 100, 150 tomorrow, would I think about selling? Obviously, right? Because like that much gain, you kind of want to take some profits off the table. But you want to give that time to develop. You don't want to be sort of inundated with the short term. And the problem with a lot of short-term traders versus long-term traders, and I guess you would call them short-term traders versus long-term investors, because if you're investing in something, it's always for the long term. Whether you're investing in yourself by like educating yourself, right? Going to college, you have 4 years to like kind of invest in yourself, or you're investing in a company. It's important to recognize that a company has a trajectory, right? It has a timeline. It has things they have to do to get things done. And when you're in the mindset of, okay, this thing is going to take time ultimately to develop in order to construct itself, you don't deal with the ramifications of short-term thinking. So with Palantir, their stock dived after Q3 earnings, right? I think it went down 20%, and people lost a lot of money on paper. But the way I think about it is like, I think I lost like $3,000. I'm just like, okay, it's down, like it'll come back up, right? Like, to me, it's never that serious to me, because I'm always like, all right, it has a chance to come back up in the future. Like, and the future is the saving grace here. The fact that there is a future for your money to come back because of how the stock market fluctuates is sort of the saving grace. You don't want to be so concerned about being down a couple $1,000s, and it could be even more than that if you're invested in something for the long term, especially with something like Palantir. I mean, this is a stock that's in the 20s right now, right? Like, it's really important to understand that in 2021, it's in the 20s. There's a chance for this stock to be in the hundreds and then the 200s and even beyond that in the future. So when you're thinking about that, from 25 to 22 to 26 to 21 to 27, like, there's not that much of differentiation. Now, if you're trying to get it in at 22 and get out in 27 and those $5 matter, yes, there's a differentiation. Like, obviously there's something you want to care about. But if you get in at 22, 27 and your plan is to get out at 200 or even like 100, then it makes not that much of a difference. And I think that's the really important thing to understand here. I think too many people also in the Palantir stock don't understand what it takes for a high growth tech stock to become a high growth tech stock, right? This is sort of the years of instability we had with Amazon, years of instability we had with Tesla. When I mean instability, I mean just like fluctuating a couple dollars, not really showing any real gains. And a lot of investors that are probably watching this right now missed out on that, including myself, right? There was in 2014, I didn't invest in Amazon. In 2019, I didn't invest in Tesla, even though I did, but I sold very early because I didn't have the right mindset. That's a story for another video. So it's important to recognize, like, when you find a gem that's in the 20s and you recognize the immense potential it has, given you understand the business model, given you have conviction over how the business model can integrate with tons and tons of other companies and ultimately become a successful product, then you start to recognize there is a much bigger path forward for you to be able to take the risk and take the time off your hands. The one caveat here is making sure that you don't need the money, right? Making sure you don't need the money, so usually you have some income coming on the side, is important, because as soon as you start needing the money and then you start getting down, that's when you think, oh, maybe I should sell so I can get the money back and like I can keep it with me. As soon as you don't need the money, then you're like, all right, it's parked there. I don't need it. I don't need it for the next 3, 4, 5 years. And that gives you the time to be able to see progress happen. But if you're not giving yourself time to see that progress happen, then ultimately you end up having a really risky scenario in your head, which is worse for your mental health versus your even portfolio, because you need to be in a good mental health to actually get through your life and like be a good investor. where you start feeling like the world is ending because your stock goes down a couple dollars. So I just wanted to make a quick video about that. I think especially with Palantir, there's just so much to understand about the business model, so much to understand about how the potential trajectory the potential trajectory of the company can increase over the next decade. And having these short-term bursts of like it's going down $3, $4, $5. It should be $30 by now is stupid. Like, it doesn't make any sense. Like, you've got to give stuff time to develop. And while you're giving stuff time to develop, you should also be doing research, not only on other investments you can make that are opportunities where you feel like you can go all in, but also more investments on your initial company so that your conviction doubles down and you don't have to worry on the day to day. Like, I don't even check the stock price anymore on the day to day. Like, I just don't care. I check Robinhood a couple times a day and I'm like, all right, that's it. Right? There are people who are literally obsessed with looking at the ticker go up and down a couple cents. And it's like, that's idiotic. You want to be in a mindset where you're happy with your investment you made, you recognize the risks, you're able to move forward, and recognize that you're going to wake up in 5 years and make a lot of money. That's it. So that's what I want to talk about on this video. Let me know if you guys have any comments, any thoughts on what it means to be a long-term versus short-term trader and the mentality it takes to invest in Palantir. And I'll see you guys in the next one.